expectations for Russia.
Good morning, traders. It is 3:17 a.m.
Sorry, it's 8 a.m. Chicago time on Tuesday, the 17th of March, 2015. Sorry about the distraction there. Derivatives trading involves substantial risk of loss and is not suitable for all investors. My personal opinions, market data, and recommendations subject to change without notice. Past performance is not indicative of future results. Overnight news. The Reserve Bank of Australia March minutes noted that further rate cuts might be appropriate, but would move cautiously to see how the economy responded to earlier cuts. Bank of Japan kept its policy steady as expected, confident that CPI will reach target in the fiscal year 15-16, despite fall in oil prices. And important to note, the FOMC begins its two-day policy meeting. The decision comes out tomorrow. Markets are eyeing whether patient is dropped from its language in preparation for possible mid-year rate hike. Overnight, here in the U.S., German March ZOO current situation survey came in at 55.1 versus 52. This is the highest since February 2014. Expectations came in at 54.8 versus 59.4. The March current situation survey saw its fifth straight month of improvement, again, highest since February 2014. And then finally, U.S. February housing starts came in at 0.897 million versus 1.04. Building permits 1.09 versus 1.06. Looking ahead, very, very light calendar today. We have 9 o'clock weekly ECB Forex reserves. At 10:30 for those trading treasuries, there's a 4-week bill auction, and then at 3:30, right after the pit close, we have weekly API oil inventories. Let's switch gears and look at what the market is telling us in price and volume. Overall, yesterday, we had basically the anticipated action, except the buy side was a lot stronger than expected. Yesterday's primary hypothesis is for it to open in range out of value. Expected some responsive selling back towards 2050 or so, and then the expectation was for us to find buyers and head back up to 2059, being the first area that would be broken. 2059 is that weak high we left behind from last Thursday on this very odd shaped profile. And then the next target up was 6175. And then the extended target was 6775, the naked point of control from the template day, which was the 9th last week. So that was last Monday. So yesterday we essentially came back and tested the levels that we had created Monday a week ago. We pushed into 50% of the swing. So if you look at this swing here, from high to low, from 2110 and a quarter down to the low of 2030.75. The midpoint of the swing was right at 2070.50. Didn't really expect it to get here already, but it did, and it left a key LVN in that area at 2070, which is the overnight high. Some pretty decent selling on price on the close, but the delta was very, very strong. This is a very odd divergence here. We don't see that often. The market, basically, the prices dropped here from approximately 2074 down into 2067 on the close, 7 points, and delta remains strong. It just seemed like the bids were being pulled. Anyway, again, very odd. So overall, the primary hypothesis played out. there was just not much in the way of pullbacks. It was very hard to get on this long yesterday. So if you got on it in the first place, so it's where we are. From there, we reopened. We continued to drift lower on this big drop, and have traded through the Asia session. You can see here we tested the point of control at 64.50 to the tick, pulled back, tested it again, and then pushed back up to 2070, which is that low volume node here. And then once Europe opened, selling came in, and we have what looks like a weakish low, with the market trading below the midpoint of the overnight session, with the point of control beneath us. This looks like it may give us a fairly turbulent open. We'll see about that. Overall, what has the market done? The market's basically made that high at 2110, consolidated for a couple of days, and then rolled over for a pullback, pushed into the prior balance zone, and put in a low of 20.30.75. Looked like it was a weakish low on this retest, and then yesterday it pushed back up with a key price above us at 20.77. That's the key LVN of the zone. I have merged the micro composite that was up here with the one that was down here to look at the full picture. 2077 is now the dividing line in between the two products. 74.75 was the low balance before that. It's also a key CLVN. This is the area that buyers need to take over in order to start making their trip back up to 2101 and 2103. And so overall, the market's is finding its buyers, but there seems to be a battle on both ends to control the action. So overall, we left an excess low behind, fairly strong looking low. Single prints start at 2062.50. And as long as we don't pull back into that, if we find ourselves opening and pushing below 62.50, you'll see a caution longs from me on Twitter and in the Stage 5 chat room. Be careful fading this flagpole here. I would not get long into this. This behaves almost like a gap zone all the way down. You could see here it pushed. It basically, the starting point is the single from a couple days ago and the open from a couple days ago. So it's free to drop down into the 54.50 area once it gets into 62.50. So caution on that. It's easier to see it on the market profile chart rather than volume profiling. So I wanted to show you that. Overall today, I'm looking at an open that's in value, in range, right up against the point of control. Again, 62.50 just below us. 60.75 is the overnight low. I'm looking for a choppy open this morning. Looking for chop to come in all the way back up to 66.50 or so. But I expect a selling day, somewhat of a selling day. This obviously left a huge gap below, and really did not have a two-way auction on the way up. So the expectation is that the market may have a responsive push up. A buyer may step in here, but I'm looking for resistance, and I'm looking for this to rotate back down again below 62.50, caution all the way down to 54.50 or so. Okay, so that's the primary idea. Chop, attempt higher, sellers come in and likely to push it back down. Again, we are in balance in this area, so I expect this day to be taken back. I don't expect this to continue rushing up. Not seeing any news or anything that would cause this to continue to push in a directional way. So just be exercise discretion in your picking of your trades, and consider that there's just a lot that's coming out tomorrow, and the market's likely to go quiet fairly early. Other than that, looking at crude oil continuing to drop in a trend fashion. This has now basically done a long-term continuation. Any rotation up from here is likely to tell me that the low put in, and I'm not saying the current low is the low that it'll put in for a swing, but if this does start to rotate back up from here, I would expect the low to be held for quite some time, since the market is basically doing a continuation of the impulsive move down now. So consolidated for a few weeks, and now it's breaking lower. If it does start pulling back into this high volume area, I would expect this low to be here for a little bit of time. I'll leave you with that thought. I want to let everybody know on Thursday we're going to have Chad Payne of Investor RT of Linsoft, the software that I use here. Come on, if you use the software, considering switching software, you might be interested in listening to this. It's about an hour-long webinar. There have been a lot of improvements and changes, including this nifty chart that computes our rotations, our trading rotations dynamically. He's going to go over all these features plus more on Thursday at 3:30 Central, 4:30 Eastern. I'll post a GoToWebinar link to that today, and I'll keep tweeting it out over the next few days. It's well worth looking at. If you do a lot of homework on Excel and stuff, the whole idea is to move from using Excel as the homework tool to the actual charting package to do the homework itself. Huge help here for those who are familiar with IRT. Anyway, if you're interested in the software, obviously linsoft.com/FT71. And that's it. I'll catch you tomorrow. Take care.